Joining us now is Invesco Global Market Strategist Brian Levitt and Vital Knowledge founder Adam Crisafulli. Good afternoon to you both. Adam, I'll start with you. We had a rally here to kick off the week. The S&P 4518 is where we finished off, and the Dow up 408 points. Where do we go from here?
Yeah, so I think we're kind of in this sideways price action for the time being, where you have valuation constraints on the upside, and that's preventing the type of close, above a 4550 or 4600. But on the downside, it's really difficult to kind of sustain a sell-off, just given that you still have pretty favorable news flow. So today, it was a combination of disinflationary economic numbers with the Manheim Used Car Index. You had relatively dovish comments from New York Fed President Williams in the New York Times interview. And then on earnings, Berkshire Hathaway probably has more exposure to the U.S. economy, more parts of the U.S. economy than any large company, and had very solid numbers Saturday morning. And that's like hit all-time highs today. So, you continue to have favorable news flow, which is preventing a slump, but you also have valuation constraints, which is kind of preventing a real upside break. And so we're in this sideways price action that, we've seen for a few weeks, and I suspect that's going to continue.
Brian, do you agree? And I'll throw in the fact, as we do await some more reports here, the fact that given we're mostly through this earnings season, and so far it's been better than expected, how much is that contributing to the narrative here?
Well, it is, and the market is broadening out. So the valuation constraints tend to be in the largest names, the real mega cap quality names that did well in the regional bank scare, March, April, May. And so what you're seeing now is a healthier market, a market that's broadening out, days where you see the Dow Jones Industrial Average outperforming the NASDAQ, and that's a good sign. So my expectation and what the market is telling us is that this is an economy that's stronger than people thought. There's no recession in 2024. The Fed's 2023. The Fed's getting closer to being done, if not already done. That suggests a market that moves higher from here. I would think it's a FOMO rally between here and the end of the year. A lot of investors have missed it. A lot of money on the sideline, and I would expect more of that to find its way into the market.
So for those investors who might be tuning in at home, Brian, where should they put money to work now to not miss it?
Yeah, it's a recovery trade. I mean, the market is excited about improving economic activity, and so that's a shift away in the near term from mega cap growth businesses towards smaller cap, value-oriented, international and emerging markets. So you want to be cyclical, you want to be risk on, and we would expect that to play out between now and the end of the year. We could talk about 2024 at some point and concerns of the economy rolling over, but for here, it's a market where cyclicals should outperform defensives and value stocks should outperform growth stocks.
Yeah, Adam, I mean, this disinflation theme that has gripped the market, and you mentioned Manheim this morning. We get CPI reading on Thursday as well. Even as the economy seems to be reaccelerating, at least right now, is this something that's going to continue to be a tailwind for stocks, or is this something that's going to be a double-edged sword? Case in point, some of the recent earnings we've gotten, and I'm going to use the example maybe of Tyson today.
Yeah. No, so I think the disinflationary pattern is going to become a double-edged sword, probably coinciding with the Q3 earnings reporting season, so a couple more months around the October timeframe. We saw in Q2, so to your example on Tyson, we saw some of the airlines, other consumer staple companies talk about how...
Adam, hold on 1 second. We've got our first earnings report. Skyworks, those results are out. Seema Modi has the numbers. Seema.
Hey, Morgan, a 3-cent beat for Skyworks Solutions, $1.73 adjusted versus the estimate of $1.70. Revenue came in line with expectations. The company is increasing its dividend by 10%, and its fourth quarter guidance basically in line with estimates. You're seeing the stock move just a bit lower here in extended trade, the overtime. Back to you, Morgan.
All right, Seema, thank you. Adam, I'll go back to you. You can finish your thought. And then I want to get your reaction to Skyworks, because it does seem like the bar has been very high. It's not enough for many of these companies to just meet expectations or even beat expectations, because so much is baked into this market. Case in point, Skyworks.
Yeah, so on disinflation, I was just going to say quickly that I do think come the Q3 season in a couple of months that more companies are going to start to talk about how their inability to increase prices like they have been over the preceding few quarters is starting to become a headwind for their business. Price hikes have been a huge driver of earnings for a lot of companies. And as that fades, it's a macro positive, but it's going to become more of a micro negative for certain industries. On Skyworks, I think we saw from Apple and Qualcomm last week that the overall smartphone market is relatively tepid right now. We're going to have the new iPhone launch. It sounds like there'll be an Apple product event in the middle of September, but overall unit sales are relatively tepid right now. And I think people are kind of just waiting to see if new product launches at the end of the year, towards the end of the year, reignite sales.